Welcome to the last episode of the Building a Winning Trading Strategy Step-by-Step series, which will be the episode where I will show you the final steps you need to take before moving on with your strategy to live trading. During this series, I showed you how to create a trading strategy from scratch. This series was divided into several episodes, and in each one, I not only told you important concepts about systematic trading, but I also created a new strategy from scratch, and I recorded everything so you could have a good example of how to implement the theoretical concepts in practice. I will leave the link to this series playlist down below. This episode will be a quicker one, because, as I told you in episode number 5, which was the one where I applied 4 great robustness tests to my strategy, today I will only redo the backtest, taking into account the cryptos and broker, where I will apply my strategy, and also taking into account all the commissions that I will pay, so that I can present you with the most real and approximate results of what your results could be when applying this strategy in your personal trading account. In case you don't recall my strategy, I will do a brief recap of it. As you can see, here are all the stats about my trading strategy. In this big data sample formed by the data from 7 different high market cap cryptos from 2018 to 2022, it had an average win rate of 59% with a total net profit of 486% using a 1% risk per trade signal, which is equivalent to an average annual profit of 97% with a max drawdown of 20.64% and an average drawdown of 4.26%. And note that these net profit and drawdown stats are calculated by using just a 1% risk per trade signal, and commissions are not yet considered. Here you can see some more important stats about the strategy, like the Sharpe ratio and the return over max drawdown ratio. Here you can see the different results of this strategy in every year, which are very reliable, and down below you can see the equity curve, which is very consistent. Now let's jump to the TradingView charts. So, as we already know, my strategy will be applied in the 2-hour time frame and on the cryptocurrency market. The indicators that I will use are the QQE MT4 indicator by Glass, with the settings 14, 5 and 4.238. In its style section, you can change the yellow line to a green one. And this indicator is my confirmation indicator, so the indicator that gives me the entry signals. In a minute, I will explain how, but first let's insert the other indicators from this strategy. The next one is the Untrend Price DPO by JTrade, with a period of 21. In its style section, you can change the DPO value from blue to yellow and increase the DPO thickness. And this indicator is my filter indicator, the one that eliminates false entry signals from the QQE MT4. Next, we have my volume indicator, which is the Water explosion. I will use this one here, with the settings 110, 20, 40, 20 and 2. In the style section of this indicator, I will change the color from the explosion line to yellow and turn off the dead zone line. The main function of this volume indicator is to protect me from entering in a sideways market. And finally, I will insert my exit indicator, which is the Tricks by Everget, with the settings 7, 1 and 9 with SMAs. I use this indicator to verify the best time to exit from a trade. So for a valid long signal, the QQE MT4 green line has to cross above the red one, the Untrend Price DPO must be above the 0 level, so it needs to be green, and the Water explosion bar needs to be green and above the explosion line, the yellow one. And for a valid short signal, the QQE MT4 red line has to cross above the green one, the Untrend Price DPO must be under the 0 level, so it needs to be red, and the Water explosion bar needs to be red and above the explosion line. And these are my entry criteria. For the risk management, the ATR indicator is used, with the default settings. The formula to calculate every stop loss is 1.5 times the ATR pip value, and the take profit is calculated based on the formula 1 times the ATR pip value. But be in mind that I only close 50% of the position on this take profit in order to protect my trades earlier. After that, a trailing stop loss is used, which is always 1.5 times the ATR pip value behind the price, and that second part of the position is only closed if the TRIX indicator or the QQE MT4 give an opposite signal or if the trailing stop loss is hit. With this method, the second 50% of the position is often closed at the 1 to 1.5 risk to reward ratio. If you want to know more about my risk management strategy, check out the first episode of this series. I know the strategy may seem a bit complex, but it is only with these criteria that it is efficient and consistent, as we concluded at the end of the 4 robustness tests we carried out in the last episode. But I made it super simple and practical by creating a new bot in TradingView. It was with this bot that I carry out all the backtests for this strategy, and will also be with it that I will apply this strategy on a live account. If you would like to understand how my bots work and discover how you can use them too, I will leave a link in the description about them. As such, let's move on to the real purpose of this episode: retest the strategy considering the broker that I will use with the respective commissions. After a great analysis of several brokers, I came to the conclusion that the best one to apply this type of strategy is Bybit. Bybit is one of the trading brokers that have the lowest crypto commissions, with an average of 0.05% commission per trade, has several crypto options for trading with the possibility of auto trading, and is simple and intuitive to be used by anyone. Bybit also offers high leverage for trading without a minimum deposit. If you are interested in knowing more about Bybit, I will leave a link in the description about it. Also, if you would like to see a video just about Bybit and how to use it, smash the like button and tell me your opinion in the comments. Now, I am going to redo the backtest using the data from Bybit and considering an average commission per trade of 0.05%. Also, be in mind that the process that I will show you in this video can be applied to any other broker. So now, let's go back to TradingView. To search for the data provided by Bybit, first you need to click on the symbol search, then on the crypto section, and then here on the sources you need to look for the one you want to use, in my case Bybit, and then click on it. And now for every crypto you want to analyze, the data provided to you will be the data from Bybit. There are several options, but I will want to trade USDT perpetual contracts, so every crypto that I will analyze will be based on that. With the use of my bot, as soon as I click on the crypto I want to test, in seconds I have all the statistical information about the performance of the strategy. The bot places all the trades with trade entries and exits with the respective stop loss, take profit and trailing stop loss levels on the chart. And here in the strategy tester, it tells me all the information I need to know about the strategy. To include the calculation of commissions in all the trades, I just have to go to my bot's menu settings, click on properties and put the commission value here, in this case a value of 0.05%. As such, I will now apply the bot to some cryptos that I will want to trade on Bybit, and I will download all the trades to a new Excel sheet in order to show you all the differences that occurred in the performance of my strategy. Will this crypto trading strategy continue to be consistent in these new conditions? Let's find out. So, after applying this strategy on the Bybit USDT perpetual contracts of 10 different cryptocurrencies with a 1% risk per trade and a 0.05% commission per trade, here we have all the results of 2022. I have not been able to apply the strategy since 2018 because Bybit has no data until then, but even so, the 2022 data is enough, as we are on the 2-hour time frame. As you can see, the win rate dropped slightly to 56%, but the net profit continued to be quite high, with a value of 90% just with a 1% risk per trade. If I use the most used risk per trade of 2%, this net profit will be 180%. You can pause the video to see the results of the stats, but I'm going to move on to the drawdown analysis, which, as you can see, remained very similar with a max drawdown value of 23% and an average drawdown value of 5.8%. Regarding the values of our ratios, they are still excellent. The equity curve also remains consistent. It had a slight drop here, where it had the 23% max drawdown, but in a short time it recovered from the drop and reached new highs. And take note that this equity curve is from 2022, a year that was very negative for the cryptocurrency market. For this reason, we can now verify that the strategy is more than ready to be put into action on a real trading account. As I already mentioned, I will apply it at Bybit, and I will sometimes bring you videos to show you how the results of this strategy are being. Although this was the last episode of this series, this was just the beginning of a big project in my channel. Because the next step will be to create a strategy for other types of markets, such as the Forex and stock market, so that we can build together an AlgoTrade Pro portfolio of trading strategies. Strategies that will be consistent and profitable with real and proven results, and that all of you will be able to use. As such, stay tuned. If you have stayed here until now watching the video, click on the like button and put the tag I stayed in the comments, because that way you will be able to gain free access to this crypto strategy coded in PineScript, so that you can use it to automate your backtests and to create alerts for trading. Next week, I will announce the winner of this giveaway on my free Discord channel. And that's it. I hope you learned something from this video, and don't forget to subscribe, share and like it to support me in bringing more content to you. Be well, thank you, bye bye.